And the people that are promoting it, that are the most aggressive at it, are not going to be swayed by issues like there's not enough copper and silver and lead and zinc to do this. They're going to keep pushing until the price of these metals gets to the point it doesn't make sense anymore.
Well, hello there, my friends. Chris Marcus here with you. On a Sunday afternoon is when we're recording, covering the silver market. I'm in my last day in Mazatlan here, but how fortunate. We have a beach in the background. You can get the sounds of the ocean and also the sounds of silver wisdom from David Smith of the Morgan Report. David, as we were talking a little while ago, I was thinking if, in case you're too busy to play David Smith when we make the big Silver Short movie, if we were typecasting for who we're looking for, I mean, it's kind of like you're, at least in my mind, like a Mr. Miyagi of silver. So when I get frustrated and thinking short-term things didn't move quickly enough, I'll think of some of the things that I read in your great silver book, which before we wrap up, you could tell folks about. And maybe we mix Mr. Miyagi with Tom Hagen, because, a consigliere to David Morgan. So quite a resume, and great to have you on in here at a fascinating time in the silver market. So David, welcome on in, and how are you?
Real good, Chris. It's good to be back. And, a la Mr. Miyagi, if wax on doesn't work, we can always do wax off.
Well, I mean, I guess you have a lot of time to practice a lot of things, including patience, while you wait for silver to catch up with the rest of the world. We'll dig in. There's a great story from Ronan Manley of Bullion Star last week. Further evidence suggesting that Russia now moving to perhaps a more official gold-backed ruble standard. We'll touch in on that as well, although something I think would be relevant for people who are saying, aside from the latest developments, I've been reading Peter Lynch's Beating the Street. This is Peter Lynch of the Magellan Fund back, 35, 40 years ago. And he talks a lot about how, at the end of the day, people have always thought the world's going to end or there's going to be inflation and certain things. And there's a degree to which he's been right. I mean, over the last 10 years, the stock portfolio component versus the silver part, the stocks have won big time. And he makes the argument that if you're investing in American business, you get to capture that. Yet, I think the disconnect is, how do you factor that in when it's all based on printed money, which is what, maybe not all based on printed money, but when there's that pin that you can pop it. I'm wondering what Peter Lynch would say now. Hopefully get him on the show at some point, but really someone that I think you're qualified with your experience and perspective on the markets. Long question there, but I'll let you take it from there. And what do you think he would say about that choice today between stocks and silver and silver stocks or anything else?
Well, Peter Lynch, of course, was one of the, if not the preeminent fund managers during his lengthy heyday. And hardly anyone else could hold a candle to him in terms of his consistent returns. One of the things I wonder about, and there's some films of him being on, some of them fairly recently, where he has a real sense of dry humor, but you can still learn a lot about how he worked with the markets. I think during his time that share buybacks were not a big factor. In fact, they might not have even been legal to do. And since then, and over the last decade or so, the rule has been changed, and any number of companies have spent tens of billions of dollars buying back their shares, much of it with borrowed money. And I wonder if he would look at things differently today in terms of what is a fair share price with that kind of discrepancy in it, as opposed to actually earning more profit or by increasing market share, or the traditional things that we used to, for decades, judge a company by in terms of its strength and relevancy and future to earn more and help shareholders.
So we didn't have quantitative easing wasn't a thing back when this book was written. And then now we've had a decade of this. We're in the same problem. Also seeing that the Fed governor is front running a lot of their own policy. So it seems more like some form of organized crime at some level rather than, something that's a stability of bedrock investing. So it's like, I don't know what he would say there. What do you think? Because it's like, it makes sense investing in the American economy, yet there's a few extenuating circumstances in this.
There are other elements that are different too in this regard. There used to be banks and brokerage houses could not do the types of investing and carry out the types of leverage that they do, 50 to 1, 100 to 1, this type of thing. I don't know how you get a clear sense of what is real versus what is kabuki theater when that sort of thing is going on. Would you agree?
Yeah, and that's really the question that I've been wrestling with for the last couple of weeks or month or so, where, as my background was on a trading floor. So if, I'm doing great in these 9 stocks, we were market makers. We weren't taking fundamental market positions, but, we would review. If you're doing great in these 9, getting clobbered in this one, and then how do you calibrate going forward? So I've been applying that same process where it's like, and again, perhaps, not that it has to be a choice of one versus the other, but to the degree that, there's a case to be made that stocks have gone up a lot over that past decade. But if it's based on, I can't see the difference between today's stock market to some degree versus what Bernie Madoff was doing, where instead of Bernie Madoff, you have Jerome Powell. And is that oversimplifying it a touch? Perhaps, but there's that degree to which, yes, there is that American productivity because people still do buy products, but at what valuation? And that's where I've been confused.
Right, and we have quite a bit of evidence that we're at the end of a multi-decade secular bull market in long bond prices. With the nadir being the interest rate probably never go lower, and maybe starting another 30 or 40-year trend of increased interest rates and lower bond prices. That's got to have a huge effect. So things are, and not to mention that, but the commodities disconnect between that and the S&P 500 is at a stretch point that, of the last 35 to 40 years, it's never been greater. So I would call it almost a near rupture rather than an extension of what's going on. So for a value investor, and I think Peter would look at this and say, you know what, commodities look to me like they have almost an across the board potential to be the value play that I saw 40 years ago in stocks. I mean, this is a newly developing trend. It may not jump out of the box right away, but it is building momentum. And whereas during his early days, the amount of money that was available for investors was up to 3.5% invested in commodity stocks, it's now 0.5%, if that. So there are a number of indicators, and I'm sure that he looked at a lot of different things and would do the same thing today. And I suspect his view of stocks, general stocks versus commodities, would be much more nuanced today than it would have been even 10 or 20 years ago.
Yeah, in fact, he does do that. I was just reading through that page a couple days ago. And one of the things he talks about, though, is I guess it was looking at companies where they've increased their dividend the past 20 years. And he was saying, that's a pretty finite list, but just looking at that would have been a pretty successful formula. So I've been wondering if maybe some sort of, again, not that there's a one size fits all yet, that's where some of the silver stocks, and this isn't of what anyone should do, just my own thinking, where if I want to inherently buy low, it's kind of the only option left on the board if you want to capture something where a business that actually could be making money where you're paying a low price based on, I know the Putin price hike, as Joe Biden labels it, is in full effect. And fault aside, doesn't seem to be going away. So I wonder if that's not a good nexus, not to go overboard, but at least something that makes sense of where do you go from here.
I think investing in the commodity sector makes a lot of sense. And you can start small and get larger based upon the premise that you're assuming is correct. So if prices go through certain resistance levels, you can assume, well, my idea is correct. I'll commit more money. You don't have to go all in and hope for the best. That's what people tend to do when they get an idea in their head. But I think going in tranches makes a lot of sense. And you can still buy lower if it goes lower, rather than going all in and then saying, well, now what do I do? The price is lower, I got to start selling. So I think those things make a lot of sense. We didn't have the EV revolution going on where, for example, in my state, in Washington State, the governor doesn't want any ICE vehicles, internal combustion engine, including trucks, running after 2030. I mean, that's 8 years away, less than that. And that's not going to be possible because the infrastructure is not going to be there by then. But yet that's what they're going to push. And they're going to try to push fossil fuels off the edge of the universe. So a lot of things are being done, I think, without clear planning. And the market will readjust itself to reflect those realities going forward. And they will price the metals that they're trying to get to do these things to much higher levels because they're not pricing that in right now. So I think looking at the commodities sector, including grains, metals, and other things that are used going forward, and rare earths, which are metals, is something that would be worth a person's time to do. And because the disconnect is so stretched between regular stocks and commodities, I think if they get it right on a few of these companies, the returns are going to be much better for them than if they've been trying to do this even 5 or 10 years ago.
Well, that's a good point because I wonder where we talk a lot about the disconnect and where do things ever get connected. And I've been wondering about a lot of the plans for going green. And, I mean, sometimes government reminds me of those first grade book reports where you get an A+ for trying. I mean, Joe Biden, he tosses out these like, we're going to go green, we're going to reduce this, we're going to reduce that. But it's like Jabba the Hutt saying, I'm gonna tell my abs to be razor sharp. It doesn't work like that. And I mean, we're seeing they can talk about going green all they want. In the end, I mean, they're blowing out the supply chains now. And at the State of the Union, 2 months ago, he was like, hey, we got a plan. Then last month, hey, it's the Putin price hike, it's his fault. Yet in the end, there's no plan. So I wonder, they can say these things. Do we get a green revolution? Is this going to be the price? Because they're also making it pretty darn hard on anyone who's going to try and go run a business and dig silver out of the ground in these environments, which now I might include allegedly 200 basis points of interest rate hikes. You have like one Fed governor after another, like chest thumping who's going to raise it the fastest. So something doesn't add up there to me. But what do you say to that, David?
The Green Revolution is at its core an ideology. And the people that are promoting it, that are the most aggressive at it, are not going to be swayed by issues like there's not enough copper and silver and lead and zinc to do this. They're going to keep pushing until the price of these metals gets to the point it doesn't make sense anymore. And they have to come back and say, well, maybe we better stretch this out a little. And the same thing is going on with uranium. We just see the advanced story played out in Germany on this, and it'll be played out in other countries as well too, where they're not content to let an evolution take place. They want it to be a revolution. Let's kill fossil fuels today and somehow get the green revolution fully actualized within 6 or 8 years. It's just not likely to happen. And the only way that that can be even close to happening is if the market reprices these metals to the point where they make a little bit more sense in regard to what they're trying to accomplish, which means much higher metals. One of the important tells is to look at the London Metals Exchange. I mean, there's several people that with deep experience with these exchanges have said, we've never seen a situation in our career where all the metals have been at such critically low levels at the same time. And, the explosion in zinc not too long ago shows just what's going on there. And one of the silly things that they did, the organizers just canceled some of the trades so that the entities that were
Well,
farther than Hawk weren't quite didn't have quite a margin call. So they'll change the rules, they'll try to change reality, but ultimately reality will have to change them to get closer to what really is.
yeah, and ironically enough, some of those canceled trades, which I couldn't imagine as a former trader, if I'd gone to work, traded all day, and especially if I'd made money, and then guy says, "Oh, because J.P. Morgan has to bail out Big Shot." That's actually the guy who was massively short nickel. His buddies call him Big Shot. That's his nickname, Big Shot. So
Right.
Big Shot got too big in the global. He basically was going to ruin nickel for everybody else on the planet, but JP Morgan was his broker, so they just tamped the price back down. And I guess that's the part of the markets where it's like I wonder how much longer this can go, because it's like you have the three stooges in running the various governments, and then Inspector Clouseau over at the CFTC, and it's like become a comic book caricature. Although, despite the video I saw that shows at least that to some degree that Putin has been attending some of those Davos meetings, which does make me wonder how that all goes. Having an issue with my screen share, but I'll mention that there was a great article from Ronan Manley of Bullion Star last week. Kremlin confirms intention to back rule with gold and commodities. And he was talking about an interview on April 26th, which was last Tuesday, with the Secretary of Russia's Federation Security Council, Nikolai Patrushev, who Ronan digs into the background. It's not just some dude, but they're talking about actively planning moving closer to a gold standard. Now, they've had what seemed to me kind of like, hey, this is a temporary band-aid with the gold backing to the ruble. It seems as if now they're having the smart people of the day sit in rooms and say, all right, this was the stopgap. How do we move forward? I don't know what else they would do, but what do you say there, David?
Well, you remember when Nixon took us off the gold standard, it's generally recognized if you do a little research, which I know you've done. Everybody involved thought it would be temporary. Well, it was 1971. Well, here we are, 2022. I wouldn't call that temporary. So this thing with kicking Russia out of SWIFT and impounding hundreds of millions of dollars of their own money, which was contractually set up to do agreements that had already been made in buying and selling. This is a whole new paradigm. We don't know what it's going to look like going forward, but we're not going to go back to the way things were just a few months ago. It's going to be different. There are going to be new rules, and we don't know what those rules are, but some of those rules, I think, are going to be put into play by the Chinese and the Russians. And they're not necessarily going to be ones that are favorable to us. We think we're masters of the universe. We have been for decades, but change happens on the margins, and those margins are getting thicker as we speak. And it's unknowable how they will play out exactly, but I think that the hubris that the masters of the universe still have is more than they have a right to hang on to. And they're going to be like Daedalus, who flew too close to the sun, melted the wax on their wings, and they run a risk of crashing to Earth.
To which I'll just say that's why at least I call you the Mr. Miyagi next to Tom Hagen of Silver on a side note. Although as I'm trying to reconcile, like, what would Peter make out of all of this in the end? He didn't, at least to the part I've read so far, about third through, he hasn't talked about international investing, but I wonder if some of the arguments, or not arguments, the cases he makes for stock investing could just perhaps be applied elsewhere. I mean, how about a Russian palladium miner? I mean, there's we could do a weekend seminar on the risk reward profile of that. If you ever get your money back in one way or another and get it in and out of Russia and the US and can actually spend it depending on where you are, if you end up in Mexico, yet the potential return, what would you say, like, that at least considering other options outside of the US, I think is something people are doing, which by no means licensed financial advice, yet I don't know what Canadian brokerages think or US brokerages think, but it's at least a time where it's relevant to be considering these factors where we're seeing accounts get frozen and countries putting up more overt and perhaps substantial resistance to the petrodollar.
I think for all of us, whether we're, average Joe investors or multi-million-dollar account holders, we all face risk, and it isn't quantifiable very easily these days. For me, I try to look at and hold in my own portfolio and discuss it with others to go to low country risk areas, and some of those can turn out to be high country risk. I don't understand why Mexico decided to nationalize lithium. They don't do much with it, and all that does is cause fear for all the other metals. So what's the risk reward benefit to them on that? I don't understand that. And then the stuff that Canada did with people that sent $40 to the trucker convoy, they can freeze their assets. What are they going to do for somebody that has $20,000 invested in a gold mine there? If they decide for some reason that this person's brokerage account, should be frozen as well. I mean, this is unknowable. So on the one hand, we can't avoid being involved in these risks. On the other hand, we try to minimize it, but all of us are kind of potential victims for things that we can't foresee. And all that involves confidence falling away and trust. And it's going to become beggar thy neighbor situations, I think, for all of us. It's going to be scary, but also the potential out there for those who can get it right part of the time with their investments, I think has never been greater for anybody of any size account. That's my view.
Well, I agree with that. And perhaps if there's, some folks watching today that maybe, they're just graduated college and they're in student loan debt or just bought a house and maybe don't have a big pile of gold and silver, final question for you would be great to get your perspective on, with the things that we see. I don't know how far the Biden administration or any of these not that it's Republicans or Democrats, I think it's both, but it's concerning to me. That's one of the reasons why I came down here to Mexico, where I saw the inflation, I saw the supply chain issues. We've been talking about it for years. And especially, I think it's a little different here in Mexico, where I don't think everything's based on the credit system. So the guy who's still growing his garden, he's going to wake up. I think there's more of a degree to which things will continue to function a little more easily here, where it's interesting where, okay, let's say we have further issues, more stress in the credit markets. How does that play out in the sense that, yes, I mean, the issues, it seems like, I guess I think of America, the farming sector, like kind of like in Field of Dreams, where, if you don't have the economics worked out, there's BlackRock trying to come in and take your farm. Or you have Hoover from David, as I know you well know, in the Great Depression. Hoover was they were giving subsidies to the farmers to destroy a third of their crops while people are starving to death, which of course is beyond insane, but to the degree of what we can control, like you said, there's going to be opportunip where people are thinking now, all right, well, if the government's going to make it, whether it's learning about gardening or helping the people who know how to garden find things, or if the traditional supply chains become stressed, while it's unfortunate that it's happening, like you said, is that fair to say that these are some of the places where if someone's out of work or not finding what they want to do in the corporate economy, it can be, life will continue in some way, and I guess embracing it can be a little intimidating, but a nice on the other side of the rainbow.
Yes, and South American countries and South Americans are used to chaos, economic, political, social, and so they already swim in that melee. But I wonder what's going to happen if we have anything close to the food situation that we're talking about, a chaotic food distribution system and acquisition globally, which by definition could be worse than anything we've experienced in our lifetimes. Will that be the straw, a big straw, that breaks the camel's back and causes all sorts of social unrest and worse? Or will they add that to their bag of quivers and figure out how to deal with it? I don't know, but it's going to be very challenging going forward for all of us. And I really feel for the people that can't deal with a 10% increase in food when that was their margin for error beyond what they're paying for everything else. And they can't afford a 30% or 40% increase in corn prices. And here we are up here pushing ethanol still. A lot of disconnects there. Some of that's got to get straightened out, or there's going to be a lot of people around the world that are going to be pretty upset.
Well, I think that's happening. I think there are plenty of people who are already upset, and maybe that's again one of the silver linings, if I may, where, you know, David, it seems like you've made it through a large portion of your journey in life. I mean, you know, I've had my ups and downs, yet doing well here and thinking whatever happens, wanting to leave a better world behind. And that's why I enjoy our conversations where I'm thinking, all right, how can we in some way impact change? You see so much, I don't know what else to call it other than organized crime or terrorism on a government level, where it's people intentionally trying to make life harder for others in a variety of different ways. Yet again, it's like the more you just think about these things, I think the human instinct and human mind is more powerful. And when, you know, I've always tried to be careful not to alarm or not selling fear tactics, just that degree of being prepared when you see something coming, and then hopefully you can help make things easier for the others around you, which anyway, you're one of the ones who has helped me on my journey, so I appreciate that. And perhaps before we wrap up, you can just let folks know where they can find you and get your Miyagi-ish silvery wisdom going forward.
Well, you know, you have helped me a lot too with the people that you've had on your show and with the conversations you've had with them. And it always expands my horizons. And I'm hoping to do well in my own investment life so that I can do good for others. And I'm not waiting for that to be able to do some good, but I hope to do more good going forward and leave the world a little better place. And the opportunities for that are commensurate with the risk, if not even more so. So I'm a little bit uneasy, but I'm also excited at the same time. And I think any of us have that same opportunity if we look at things that way. So I want to thank you for what you've done. And I write monthly for the Morgan Report. I'm getting ready to do an essay for the Prospector News, which will be out in a week or so. I write a monthly essay for Money Metals, and I'm involved with the Lode Digital Silver and Gold Project, as David Morgan is, as an ambassador. I've invested my own money in it, and I think people might want to take a look at it. They could go to ag.lode.one, or they can write to me without being able to get financial advice from me at davids@lode.one, and I'll try to point them in some directions without giving financial advice, because I think we're in very exciting times. So thank you so much, Chris, for having me on.
Well, it's great catching up with you as always. You know, you already had a great body of knowledge as your own man, although then it's remind folks you're partners with David Morgan, so you have two people who have studied this and have their own perspective to bounce ideas off of each other. So it's kind of like exciting for me that we can get this history out there, because I wonder, you know, you can't get a straight story out of the media of what's happening today, let alone 50 years ago. I'm still trying to piece together what really happened with the Hunt brothers. So thank you for sharing all of this knowledge. We'll have the links to find David and all of his projects in the description field below. David, with that said, thank you again. We'll look forward to doing this again soon.
Sounds good, Chris, and thank you for the good work that you're doing.
All right. Thank you, my friend. Well, thank you for being here today. Hopefully you enjoyed that conversation with David Smith. I really enjoy any time I get to talk to him. A lot of insight, some great perspective that at least helps me make decisions of what to do with all of this murky information I find in the silver world. And before we wrap up, I'd like to mention a thank you to BlackRock Silver and Andrew Pollard of BlackRock Silver, who sponsored tonight's call. And you can find out more about their project at Tonopah West, where they have found a nice silver resource, and you can find the details of that at BlackRock Silver. Also in the description field below, here are on the news page, a bunch of different updates, including news about the project. Here was the Eric Sprott investment, some of the other results, and as you see here, some partnership with First Majestic Silver. And you've seen, hopefully Andrew was on with David Kranzler on the show a couple of times, and we'll look forward to setting that up again. So thank you to Andrew, thank you to BlackRock, and again for everyone here today. Hope you enjoyed the beach. Hit the subscribe button and the notification bell, and we will keep you posted on the silver and economic news, and I'll see you again tomorrow.
David will have to get "I survived the Putin price hike" t-shirts.
That sounds good to me. Let's get a baseball cap on that too.